Well, Australia's economic growth has basically ground to a halt, which was no surprise to anyone. The only question was how close to zero it would be. The answer is as close as possible without being zero, 0.1% between December quarter and March quarter. Now, here's a longer-term perspective, 60 years of the annual growth rate. Now, I've drawn that dashed red line to show that while growth has been volatile, ranging from -3 to +9% in non-pandemic times, the 60-year trend has been steadily downwards. And it's worse when gross domestic product is divided by population to get per capita growth. Reserve Bank Governor Michelle Bullock says this isn't very useful considering we have low unemployment, but I beg to differ. It usefully shows how growth is being propped up by immigration. Per capita GDP fell in the March quarter for the 5th consecutive quarter. Final graph from the national accounts. The saving rate used to be about 5%, but after the fiscal largesse of the pandemic was spent, it now seems to be stuck at 1%, which is another symptom of the cost of living crisis. The dollar had a twitch upwards when the GDP came out, but is now slightly lower at 66.6 US cents. The share market also twitched, but stayed there, closing 0.4% higher with banks and retailers up, miners down. The Indian share market recovered 2% of yesterday's 5.7% loss following the surprising election result there. Other markets were mixed after a small rise in New York. And finally, oil, copper and gold went up last night, while iron ore fell again. And that's finance.